LSA Informal Economy Digitalization Index. I am Bronwyn Nielsen, your moderator for the session, and we are joined by the executive team from Lesaka Technologies and also by Gigi Alcock, who is the founder and author of Kazi Economics. I'm going to ask everyone to introduce themselves around the table for our investor call. We do appreciate the fact that you have joined us for this session. And I'm going to kick off just with informal introductions. Gigi will be setting the scene on the South African informal economy. He is a well-known thought leader in this space. And we will also be opening up to questions once we have had the scenario setting from Gigi. But if we can just go around the room, Gigi, if you want to add to your introduction, Lesaka, and then Lincoln Mali's Lesaka's Lincoln Mali, and Martin Wright. Gigi, just a brief introduction.
Yeah, hi everyone. Gigi Alcock. I'm an author of 2 books about the informal economy, which in essence have originated from work I do for multinationals and South African businesses in the township and rural informal economies. I renamed them Gasinomics because it's about really shaping a different dialogue about the scale and size, which I'll talk to just now about the informal economy, which is a fairly active, booming space. So, yeah.
Lincoln Mali, the CEO of Lesaka Southern Africa. Just more from your side, sir.
Thanks, Bronwyn. Welcome, everybody. Thank you so much for coming. This is quite a milestone for us as Lesaka, and for me personally, having grown up in this environment and having been passionate about the opportunities that sit in this market. It's a big thing for us to be hosting this conversation about the South African informal economy and how it's digitizing. And I'm very happy to have my brother Gigi, with whom I've been on this journey for many years, to get this part of the economy to be at the center of all conversations. So really, thank you so much. And it's a big day for us at Lesaka.
And joining us from Cape Town, Martin Wright, the CEO of Kazang. Martin, over to you.
Yes, hi everybody. As has been said, Martin Wright, the CEO of Kazang, based in Cape Town. So I have the pleasure of not joining everyone in Johannesburg today, but happy to have this discussion and take your questions. Thank you.
Great, Gigi, let's go straight to that scene setting, and we've got a presentation that you're going to flick through in the early stages, then we'll open to Q&A.
Great. So I think one of the things about the informal markets, one of the reasons I didn't call my books anything about the informal market, is that it's not so informal. I think the second part about the informal economy, if that's what we're going to call it, is that if you took a mirror to the formal economy, you would find every one of the sectors in the formal economy represented there, and in many cases actually performing as well, or if not outperforming the formal economy. So just to go through some of these things, starting in the top left there, I won't go through all of these, but if we look at FMCG, we have in South Africa what's called a spaza shop. Spaza, in essence, comes from the term for invisible. They used to be in the apartheid days, these invisible, informal, illegal outlets. The spaza sector is completely transformed to a very successful sector and incorporates both, and I'll go into a bit more breakdown just now, but incorporates everything from a kind of hole in the wall, the equivalent of a garage shop or a forecourt store, all the way through to a supermarket type outlet. We've got about 100,000 outlets within the broad spaza-rect sector, another 500,000 tabletop traders. These would be more of a kind of a little kiosk on the side of the road or within a taxi rank or commuter area. Sometimes they're mobile and they're operating in the street at an intersection and so on. There's about 500,000 of those selling everything from airtime all the way through to fruit and vegetables and so on. And this total sector is about 180 billion rand a year sector. On the right-hand side is the alcohol sector, on-premise alcohol, what we would call taverns, often called shebeens as well. We've got about 45,000 legally licensed liquor outlets, on-premise consumption, with about 110 billion rand a year turnover, premiumizing incredibly rapidly. just within this kind of thing, we also have some kind of really anomalies. I mean, a lot of the spaza sector is owned by immigrant traders. They pay rental to South African households. So we have a 25 billion rand a year and call it a informal business rental. And over and above that, there's a very large single and two-person rental and back rooms at the bottom right there. That's another 20 billion rand. So often we kind of hear these stories about massive unemployment. I tend to say to people, place the term formal in front of unemployment, because there's a huge amount of informal unemployment and informal income. So just that 20 billion plus 25 billion in rentals is almost 50 billion rand a year. Then we have the hair sector. Hair salons is 10 billion rand, and a lot of others. The fast food sector is a sector that's also growing in sophistication. It's a range of traditional African foods. And we have about 90 billion rand a year across 50,000 outlets. I mean, they're kind of on the left-hand side there, everything from construction. There's a huge informal construction and home building sector. Auto traders, there's about 80,000 auto traders and informal panel beaters. If we look at our public transport, we have private public transport and what we call taxis, which are minibus taxis. There's about 250,000 minibus taxis turning over 50 billion rand a year. And they are serviced by this auto trade of about 80,000 panel beaters, Gussie mechanics, and so on. So just even in that sector, we also have a large amount of the e-hailing people like Bolt and Uber and so on, who would utilize this informal auto traders. You could take your vehicle there in the evening and it'll be repaired or serviced overnight. So you kind of have this interface between the formal and informal also happening quite a lot. And then
I'm sorry to interrupt your train of thought. Just in terms of logistics for the Q&A, please note we don't have a chat facility where you can type your questions. When we open to Q&A, there will be audio questions and we will open your mics once you signaled the appropriate question. Apologies for interrupting you.
No problem at all. So in essence, I mean, I won't go through all of them, a huge number of sectors. For today's purpose, we're talking about primarily the tavern and the FMCG space, where Kazang and Lesaka are primarily active, not only, but focused on those sectors. But if we look at that sector, we're talking about 600 billion rand across 500 townships. So really, really big sector and doing incredibly well. If we go to the next slide, when we look at FMCG, so this is fast-moving consumer goods. These would be packaged goods, grocery items. We have a number of different sectors from cash and carries. These would be wholesalers who supply the spaza sector. We then have also MIDI wholesalers. MIDI wholesalers are kind of independent wholesalers who are halfway between the kind of cash and carry, which is a substantial large store, and the actual superette. And then we kind of have split between superettes and spaza shops. I call the superettes also spazarettes because it's a spaza that's become a superette. We have about 30,000 superettes out there. Now, just to dwell on this briefly, because it really kind of affects this digitization discussion. The sense is often that these are little informal store doing poorly and struggling along. The spazarette sector, the bottom picture there, are supermarket type outlets. Recent research by Nielsen, the international audit business and trade business, talks to the fact that this sector is growing by about more than 22%, whereas the formal retail sector is growing only at 14%. So almost double, and this is accelerating rapidly. This sector is uniquely suited to consumer supply. They're in walking distance from people. And in a sense, this is a space where we've seen a lot of digitization. We've seen a lot of kind of hybrid formality. A little store like this will have a barcode scanner. We'll be supplying a full range of products. We see them being cheaper often or on par with a formal retailer like ShopRite or Pick n Pay on the same branded items. So really where the action is happening in the formal and informal retail sector is happening in the super-red sector. The midi wholesalers above there, and those images just give you a sense of these kind of informal stroke formal. And this is where the problem is with informality. You know, how informal are they really? You know, a store like the top ones there on the left and right top will turn over anywhere between 350,000 Rand a day up to almost R1 million a day. So, you know, supplying up to 2,000 spaza shops on a daily basis. Go to the next one. Then we have, this would be your typical spaza. As I mentioned, it's like the township forecourt is really about run out and daily things like bread, milk, airtime, and so on. About 70,000 of these spaza shops, also digitizing rapidly. Initially, it was very much what we call VAS, which was value-added services, airtime, electricity, bus tickets, and so on, but increasingly payment happening at these places. And then at the bottom would be your typical tabletops and kind of hawkers. And again, what we've seen there is this really dramatic change with you know, the sector becoming very economically active. The right-hand side there, personal care, beauty items accelerating rapidly. A kind of fun fact: the most stolen product in South Africa's ports, according to the South African insurance industry, is hair extensions and beauty products, which just points to the massive growth of the hair sector. The fruit and vegetable sector is another very strong sector there. Just in Johannesburg, we have a fruit and veg market that supplies the total trade, formal and informal. Just the Joburg fresh produce market turns over 12 billion Rand a year, and 60% of their purchases are informal traders. Just gives a sense of the scale of the sector. Go to the next one. And then when we talk about the on and off premise alcohol sector, and importantly, these are licensed outlets. We have everything from the formal wholesalers at the top there, the licensed taverns. I mentioned 45,000 of these. And then we've kind of segmented them into 4 categories. We have very premium outlets all the way through to a kind of counter serve, which is where you would go and buy your product and take it home. And the top picture there, we often have these kind of pictures of rows of shacks in a place called Khayelitsha, which is a township on the edge of Cape Town, and which are often incorrect in terms of showing these kind of dramatic images. The place on the right-hand side there is in the center of Khayelitsha and one of more than 3 or 4 very premium outlets. So we have these in the townships, a lot of premiumization happening there. The next one down is the next kind of level, also still a tavern, fairly premium, kind of on the outside, not as premium as when you walk in, but very active kind of outlets. And the next one. And then we would go down to what we call Isporti, which is literally means my local spot. I'd go to my Isporti to kind of hang out, watch the game, and so on. About 40% of outlets are this Isporti. And then at the bottom there, counter serve outlets. And this would be someone coming from their home, buying their product and taking it home. And we've seen a huge growth that do a lot of work with the Heineken brands in South Africa. And we've seen a kind of fairly extensive premiumization happening in the space. I was telling a story earlier about an outlet in Soweto, which has a little counter like the one on the right-hand side there, who turns over R1 million a month from that little kind of hole in the wall, and selling premium products, literally from Johnny Walker all the way through to returnable quart bottles. So kind of quite a wide range.
Thanks very much, Gigi. I think really enlightening in terms of the informal economy in South Africa specifically. Martin, we are now unveiling the digitalization index, the informal economy digitalization index. If you can please take us through how it is formulated and give us a little detail.
Thank you, Bronwyn. Yeah, this is something we're really excited about. over the last 15 years, Kazang has established a merchant base of approximately 75,000 merchants in South Africa, of which 10,000 of those operate in the tavern market, the balance mainly in fixed building spas or shops. In order to operate on our system, every one of those merchants needs to have a wallet with us, and they need to get credit in the wallet in order to sell our products such as airtime, electricity, and to pay suppliers. What we did back in 2021, you can see that pretty much 100% of the wallets, the credit getting into that wallet was topped up with cash. So what that meant is that in order to get value into the wallet, our merchants would go to a bank, either an ATM or a teller machine, a teller, or to one of our vault locations and deposit physical cash in order to get value into their wallet and then be able to sell airtime, electricity, etc. 3 years ago, we launched on the same devices the ability to take card payments. And we've seen a rapid adoption of using a card in the townships in these areas and those settling into the wallet. And what we've seen is that literally within 3 years, 42% of the credit coming into that wallet is now no longer from cash, but actually through card settlements. And that represents right on about R1 billion per month now settling into these merchants' wallets. I think what's interesting for us as well is that if we look at the makeup of the cards that are being used in the townships, more than 90% of the cards that we are processing are actually debit cards, which means that the consumer, the customer of that card, has funds in their wallet. They have funds in their bank account. They have the ability to go and draw cash at the ATM and use cash, but they're actively choosing to use card and pay with card in the informal environment. So yeah, it's very exciting to see this shift to digitalization, how rapid it's been, and significant rand values. So yeah, that's what this index represents, and we're very excited about presenting it.
Thank you, Martin. And obviously, we will talk about the sustainability of the index, additional information as it will come through on a quarterly basis later on in the session. But Gigi, just coming back to you for a moment, the informal economy, as you earlier indicated, is relatively untapped. It's relatively unknown. And the key here is the sample size. So looking at over 75,000 merchants, as Martin referred to, from what you've seen in the industry, is this a significant data set?
So look, I mean, I think if we answer straight as yes, huge data set. I mean, if you look at, for instance, Stats South Africa has a annual research tool, which is called South African General Household Survey. They do about 30,000 outlets, very sound, robust national statistical information. Here we're talking 70,000 outlets. Over and above that, if we look at that total Spaza-Ret sector, I mean, if we just look at the Spaza-Rets, we've got 30,000 outlets, another 70,000 Spazas. We don't want to be down at the bottom of the little kind of hole-in-the-wall Spazas. So if you were picking the medium to larger Spazas, you're talking at least 50,000. So you've covered those off. So you've got a very high level of your total universe. You add the alcohol sector. It really is a robust sector.
Are you surprised at the rate of digitalization?
So I'm not surprised. I'm fascinated by it, and you know, I think that when we first spoke about this, I just love to get to see these figures, because my book Gastronomic Revolution was called Revolution because I said there's a revolution happening. It came out in 2018, and in 2018 I said there was going to be a revolution in card payments, and that people like Kazang and stuff should be accepting card payments at VAS devices. I foresaw this because of the high penetration, and I think Lincoln will talk to it just now, high penetration of debit cards in people's hands at the low economic level and a high literacy rate, and the risk factors of using cash and inconvenience and so on and so forth. So I kind of called it, but it's really fantastic to see. So I was fascinated, but not surprised. And I think it will accelerate. And there's just no question in my mind, 42% is just the starting point. And if you look at the speed of the adoption of that, it's just incredible.
Lincoln, obviously, we talk extensively about the dual-sided economy that Lesaka services. You are very much driving the consumer story, 1.3 million customers. And just to get a sense, as Gigi alluded to, what is driving digitalization trends within the consumer space? We've already got the scenario for the merchants.
I just take you back maybe 3 years ago. Probably 100% of all social grants were paid. Everybody went to a big place and they got paid that. But that started to change when people opted to have a bank account and for their money to be paid in a bank account. Today, of that 12 million social grants recipients, 58% of them are getting their money in a financial institution, which is us, EasyPay, and other financial institutions. And the remaining group, which is with the post office, also have a card that they can go and transact. And so how do people transact today? People will either go draw money from an ATM and then use all of the cash. But as you start to see with this trend, some people go to a POS device. And in that POS device, they can then make a transaction.
When you say POS device, you're talking about point of sale.
A point of sale device, which is either a Kazan merchant or a large retailer. Now they are making a transaction there. They are buying small items for small transactions, and that's what they want to do. Then another group will go and get money from that same POS device as cash. So that's called cash at point of sale. So all of those behaviors are starting to show you that people are saying that, of course, we trust cash. Of course, we've been with cash, but we can see the changes. We'd like to do that. If you go to a typical tavern, they will start to say to you that we're starting to see the split now between cash and card in our ecosystem. So over and above those 12 million social grant beneficiaries who are permanent grant beneficiaries, there's about 6 million who are social grant recipients on a temporary basis, the 350s, we call them SRDs. They also get money. They are also starting to spend, much more digitally. So as Gigi is saying, this direction is going to be there. There will always be debates about the pace, but you can already see that consumers are voting with their feet. And I can talk later about money transfer and other things, but just from how customers receive grants, that has changed and it's going to continue to change very, very fast.
As I said earlier, we are going to open now to audio Q&A. So Philippe will give me instruction as to if there are any questions from our audience. Again, thank you very much for joining us. We do appreciate that we have an early morning session with you. Martin, before we go to that question and answer session, anything that you would like to add specifically?
Yeah, I think we just need to look at what's driving this rapid growth. And I think there's a few factors that we can have a look at. Number one, it's getting cheaper and cheaper to do card acquiring in the informal economy. So many years ago, as in 2-3 years ago, the merchant would need to get a terminal from a bank. That terminal would come with a very high rental fee and with very high fees for the actual transaction. So there was a massive barrier to entry to take relatively low volumes of card payments. And the spaza shop owner simply was not interested in paying that cost to take card payments and often added significant costs over and above the face value to counter that, which obviously the consumer was not happy about. The other thing that has happened is that the suppliers who are delivering into the townships and taking payment have recognized that if they can take a digital payment from the spaza shop versus a cash payment has got significant advantages. And it's not just what we think, which is security. These things, people may get robbed. The first thing is speed. The transaction can be recognized immediately. And that means that from the back of a Coca-Cola truck or a truck from a bakery or a dairy, they can sell goods off the back of the truck and they know that immediately payment has been made. The second area is employee fraud. So there's a lot of fraud wherever there's cash involved. That the theft that occurs is not necessarily from people on the street stealing from you. Sometimes, unfortunately, it's your own employees, and you don't know whether the payment that has been said has been made has actually been made, and that's a massive problem in the delivery business. And last but not least, it's cost. You know, there is a cost to digitize in terms of card fees, but once the cash is in the digital world, moving around is essentially almost free. Whereas every time you touch cash, every time it changes hands, there's a very high cost of moving that cash around. So those few things are really driving this adoption. And as Gigi said earlier, we expect it to, if anything, accelerate. This is the tip of the iceberg.
If you do have any questions, please raise your digital hand and we will open your mic accordingly. Gigi, maybe if you could just come in here in terms of how the competitive environment is playing out and the major retailers are actually engaging in this environment.
Yeah. I mean, so what's quite interesting is, well, I guess there's two parts to this. I think the one part that we also need to understand is what is a typical shopper or consumer journey when they're engaging with the formal sector. When they're engaging, the average consumer is taking a taxi, paying around 15 Rand, what's that, just under $1, to go to a shopping center and paying the same amount to come back from a shopping center. That same consumer stands now in a queue of around about 2 hours on average, sometimes longer, at an ATM or outside a bank branch. They do the same at a ShopRite or a Pick n Pay, and so on and so forth. So what's the consumer experience currently of the formal sector is high cost to get there. And second of all, it's a huge inconvenience to stand in the queue there, not even mentioning them carrying my stuff back in a public, my groceries back. So now you can, as a consumer, go to the shopping center. Not go to the shopping center, go and draw your money by tapping your card at a spaza shop and getting cash out of the till. You can pay for your groceries at a till with no queue in walking distance. So there's a substantial benefit to the consumer, even outside of the fact that once they've withdrawn the money at a shopping center and they take public transport home, there's a high risk of robbery, theft, and so on when they're carrying cash back into the residential, informal, or township space. So it's a huge benefit of going to this. At the same time, we've seen this incredible growth I mentioned earlier of the spaza sector in terms of providing the one-stop shop opportunity. And you've seen people like ShopRite, for instance. ShopRite bought Mass Cash's wholesale business and now have an excess of 12 ShopRite cash and carries, in essence recognizing that their ShopRites are not able to substantially compete with 30,000 spazarettes. So if you can't compete with them, supply them, you know. So we're seeing the recognition even by retailers like a ShopRite of let's supply these guys. And also they're recognizing that consumers are coming less to, for instance, a shopping center, coming to more local stores. So we also see that the formal retailers are increasingly growing a footprint of smaller outlets in neighborhoods like the USAVE format and so on. So the shift is happening in consumer and shopper behavior as well as retail chains. Yeah.
Matt Chesler from FNK, your mic is open. Matt, go ahead. We've unmuted, so Matt, go ahead. Oh, Matt, you need to unmute. Apologies.
Thank you for taking my call. I assume you can hear me now. So I appreciated the sector breakdown from earlier in the presentation, as well as the discussion and particularly the pictures that really did help to visualize those the differences about those categories. Can you, which of those subsectors that you spoke about do you think are more driving the trend, the digitization trend, the shift? Are there any faster adopters amongst those subsectors that you highlighted?
So Gigi, and then Martin, if you can also input.
So I'll talk to the market in general, not necessarily the Lesaka or Kazang, but if we look at that, there are kind of two parts. On the one hand, the alcohol sector is driving this very strongly and has been in terms of wanting card acceptance and moving away from cash. They're obviously operating at night, so higher risk of all sorts of things. Plus, the liquor sector has to be legal to sell. You have to have a liquor license, so they have to be registered. And so that sector has kind of led this. And then the second sector is the super ret or spaza ret sector, which are really highly sophisticated stores who are sourcing substantial amounts of stock from a wholesaler and represent a higher risk in terms of taking cash out of there. So I'd say those two, the alcohol sector, broadly the taverns, and then the super rets, spaza rets. Martin?
Yeah, I would support that, Gigi. I mean, especially the alcohol sector where you've got very high volumes in a very short period of time. And the tavern owner needs quick access to those funds to pay for the next delivery, to go and buy goods to open again the next morning. So the fact that this is digitized and in our case instantly settled into the wallet is a massive advantage in driving adoption, especially in the taverns. But we are seeing this across the board. So approximately 70% of all of our merchants across all of the sectors are now taking card. So it's not standing out. We're not seeing resistance from, for example, certainly not the tavern industry, certainly not the spaza industry, but also the suppliers as well. They're accepting this digital cash and the middies, the cash and carries. So it's really across the whole informal economy that we're seeing this acceptance and adoption of digital cash.
Ross Krecher from Investec Securities, if you can unmute and take the floor, please.
Thanks very much, everyone, for the call. Really interesting stuff. Just wondering if you, being with your footprint, your platform, and your data on this, obviously you've played a part in driving this adoption. But just wondering, how does Lesaka, I suppose, mainly on the merchant side, but also on the consumer, benefit or build ecosystems around this that mean that you can ultimately improve your value proposition ahead of competitors?
Lincoln, I'd like you to take the consumer side, and Martin, I'm coming to you for the merchant side, please.
Yeah, thanks so much. One of the things that we are in deep discussions about is how do we allow grant beneficiaries to see a full distribution network that includes all of those spazas as part of places where they can get their grants or where they can go and pay and get some benefits from that. So having the network that Martin has is a huge advantage for us, and having that as part of our business is huge. Secondly, some of the products that Martin has and devices we're now deploying in our branches, again, to drive that ecosystem play. So those are some of the things that we've got in our back pocket. Some of them are probably not advanced now, but it's stuff that we're cooking as we get more of this data and dig deeper into it.
Martin, if you can elaborate on the value add in the merchant ecosystem.
Yeah, so the more money that you take into the wallets, you obviously need to provide opportunity to exit it from that wallet. And that's what we've really focused on. We've really tried to build an ecosystem that allows them to spend this digital cash in all of the supply chain. So the cash and carries, etc., the middies, the wholesalers, and some of those wholesalers are also in the formal areas, the likes of a Macro, for example, which is both the formal and informal area. The other area is supplier payments, so paying for suppliers. And the supplier, as I mentioned earlier, wants to instantly know that those goods have been paid for so they can release the goods. And they can't integrate into everybody's system. So suppliers tend to work with one or two, not more than three different providers, and that gives us a competitive advantage. So when we are locked into one of the big alcohol distributors, one of the big breweries, that means that they can pay with we can pay using our funds in our wallets, and broadens our ecosystem. But it also means that they need to take payments through Kazang and settle into the Kazang wallet. So it's mutually beneficial, and we believe a significant competitive advantage. We have over 400 different suppliers that you can pay from that Kazang wallet at this point in time, and it's literally growing on a daily basis.
Any further questions, Ross, from your side, or are you covered?
No, that's great. Thanks very much.
I just add something. I think we keep talking about social grant recipients, and maybe we don't realize the scale of that. I mean, we're talking 20 billion rand a month minimum that's being received by social grant recipients into their accounts. That's $1 billion. I think at today's rate, a bit more a month being received. So it's a substantial amount of money, and those are the people who most wanting to spend their money locally, not paid for transport, not stand in a queue. They're generally mothers with kids, grannies who are earning an old age pension and stuff like that. And so it lends itself. This is a huge sector in terms of lending itself to these services.
I do want to come, Martin, as I said earlier, to the sustainability of this index and how you will report on it going forward. I do just want to ask if there are any other questions from our audience, either in the US or here in South Africa. Again, just please notify us by signaling your digital hand. As we wait, Martin, perhaps you just talk to the sustainability and how we're going to communicate the digitalization index going forward.
Yeah, thank you, Bronwyn. So, we thought we'd introduce the index at a fairly high level, as in introduce it and just show you how much digital payments are being made in this ecosystem and how the proportion of that has increased relative to cash. And that's really what this is showing right now. But we have a lot more information, and some of that information we've already started to share with you, such as how much of that is debit versus credit. We can even look at it and how much is per bank, how much of it's coming on SASSA payments. We can look at it across the sectors of the different areas that Gigi has talked to you about in terms of superettes versus taverns versus spaza shops. So we're increasingly getting more and more information, which we're analyzing. So we want to bring you this on a quarterly basis, at least at this level, but we will be able to answer and provide even more detail, more granularity as we go forward. And we expect to do that, again, at least a quarterly basis, give you more information about what's happening on a digital basis in this township-based economy.
Thank you very much, Martin. And the presentation will be made available, the recording of this presentation. Philippe, we will distribute accordingly and put onto the website. So without that, if there aren't any further questions, I think let's draw to a close. Lincoln, a final statement from your side. I see one more question coming through before we do close out. Okay, Prenolan, Absa Securities, if you can unmute your mic, please, and go ahead, Prenolan.
Hi, everyone. Just want to find out, I mean, what are the banks doing in terms of getting involved in this space? Because they typically in the past used to stay away given the risk around the informal economy.
So Martin, do you want to start, and then Gigi, you can add in terms of your observations?
Yeah, let me kind of give you some insights. I think the first advantage that non-banks have in this space is that the device we're putting in place is used for multiple purposes. So the cost of the device is not just reliant on being covered by card acquiring, which as I mentioned earlier, for the most part, the banks will either want to sell you or charge you rental for. The cost of our device, the cost of the communications, the cost of supporting that device is actually covered by us selling value-added services, selling prepaid electricity, etc. So we can take card payments at a very, very much lower cost. So I think the formal players, the banks, have struggled to get a foothold and distribute effectively into this part of the economy. Yeah, we expect to maintain that competitive advantage going forward. We see the banks more on the card issuing side, and increasingly, especially in this part of the economy, you'll see the acquiring done by fintechs like ourselves.
Gigi, any observations to add from your side?
Yeah, so I think that there's a number of things, but look, the starting point is that banks are starting to look at this, have taken a really long time, they've seen it as a risky, or they have never understood the massive volumes that are in that space and kind of not seen that opportunity outside of card issuing. So everyone's been in this race to issue you a card and open a bank account and haven't looked at where you'd use that account. So the banks are starting to enter into that space. But if you look at the mechanics of it, and Martin will tell you, to get these devices out there, it's not like someone walks into your bank and says, may I have this device, even if it's for free. It's about having feet on the ground, knowing where the townships are, getting reps, going to the stores. My work shows that the vast proportion of people who've taken a device never expected that they would be taking card payments, took it because a rep arrived and said, hey, would you like a Kazang device? And those feet on the ground, and that is a massive competitive edge on the one hand, and it goes to things like maintenance. When that device goes off and they call the call center in the CBD, and the call center says, where's your address? And they don't know where you are. Martin's team's going to know where they are and go and call on them. So there's a substantial barrier to entry around purely just the mechanics of having these kind of field forces on the ground, which banks have never been, that's not been their space. And so as much as they're looking at it, they're struggling with that. They will struggle with that ability to penetrate and support these kind of devices. Martin, I don't know if I think that's your headache, isn't it?
Absolutely. And I think the point there is that if you look at the total RAND value, it's very, very high. But if you look at the volume per vendor, it's quite low. So it's not well suited to a traditional bank-owned point of sale device. It's as Gigi mentioned, the cost of supporting this, the knowledge that you need to operate in the informal economy is significant, and it's knowledge and a team that we built up over more than 15 years. So it's a massive barrier to entry.
Ryan Hill, please can you unmute and go ahead with your question? Ryan Hill from ABSA Securities.
Thanks, Bronwyn. Thanks for this very interesting call and for all the work that's been done to establish this index. Just two questions. One is, as far as credit is concerned, we are seeing that the mobile operators, the telcos, are getting more involved in extending loans, etc. Do you have any sense of what sort of presence they have in the space, in the wallet space? And then secondly, a sort of related question, but except it's on the retailing side. So if you look at I guess the lower end retailers like Boxer and others, do you have a sense of what sort of market share they have in this informal economy?
So Martin, on the mobile operators, Gigi, I think in terms of Boxer, you may be able to input appropriately there. Martin, to you first.
Yeah, so we are seeing some of the mobile network operators with their own presence in this part of the economy. but for the most part, they are partnering with the likes of companies like ours. So, for example, we can do cash in and cash out of multiple mobile network operators' wallets. And I think that's what you're going to see traction with. And there'll be more wallets coming, of which obviously PayShap will basically be another one that we'll see coming forward. So yeah, I think they will play a part in this digitalization, but I think for the most part the success will come with how they partner with companies like us that are already well established in the informal economy.
Lincoln, you signaled you want to come in before Gigi.
Yeah, I was just going to say that if you look at many parts of the country where there's no much economic activity in the formal sense, as Gigi was saying, you'll find that the only sources of income are either social grants or money transfers from people, or PayShap or banks money transfers, or civil service jobs. In those environments, it's only companies like Boxer, Joylani, and others who are growing OBC and others in that environment, but they do it with the partnerships like Martin is saying, and they also go into those environments because they know social grant beneficiaries will be paid on certain days. They also know certain pay cycles of people who are employed. Those people will send money to relatives at home and all of that. So they try and position themselves for those kind of flows that come from other social grants or from people who are formally employed who've got relatives that they pay them.
Gigi?
Yeah, so I think the question around the formal retailers, people like Boxer and so on, is that there's a real land grab of people trying to desperately get in closer to people, because the original land grab was to get your ShopRite or Boxer in a shopping center or in a taxi rank or in downtown of a small rural town. As consumer patterns have shifted to more local neighborhood shopping, there's a desperate land grab now to get more stores closer to people. And you'll see, for instance, I think in Boxer's latest figures, they mentioned that they wanted to have however many stores, and they only managed to get 60% of those stores. So it is going to be very difficult for formal retailers to get property, real estate, where they can set up their business. And at the same time, the informal trader literally finds a house, rents it, turns it into a superette and starts trading. So if you looked at their market share currently between informal and formal and FMCG, the figures are around 26 to 30% of that total FMCG businesses in the informal sector. But if you looked 2 or 3 years ago, it was 10%. So there's that growth I mentioned of 22%. So I would anticipate that you will find that within the next couple of years, the informal sector FMCG will represent in excess of 30, probably closer to 40%, which is almost half of all FMCG business. And we see this happening in terms of just the wholesale sector. If you look at the wholesale sector, and I mentioned ShopRite's entered that space, the wholesale sector has accelerated dramatically. And these are wholesalers who are supplying independent traders, formal and informal. They're not a massive retailer like a ShopRite. And that wholesale growth is telling you that the role of the informal trader, independent trader, is accelerating rapidly. So yeah, there's a land grab out there, and the likes of Boxer are doing very, very well. So ShopRite with their USave business, there's a real push to try and get more stores. But right now, the informal guys got the edge on that.
Ryan, just checking that we have answered your questions appropriately. Is there anything else that you would like to pose?
No, thank you, Bronwyn.
Great. I think with that, we're going to call to a close. So to the team, Gigi, thank you for your insights. Lincoln, appreciate your time. Martin, thank you for joining us from Cape Town. And to our audience, thank you so much for your time, and either have a good day or a good evening going forward. Thank you for joining us.
Thank you, everyone.
Thanks, everybody. Bye.